You must have heard the term bear market being thrown around whenever the crypto market consistently falls for a prolonged period of time. Truth is, there's no textbook definition of a bear market. But an average drop of 20% in the value of cryptos from their most recent highs is enough to enter a bear market, according to experts. By this logic, the crypto market has been bearish since December 2021. That said, this isn't the first time the crypto market has entered bear market territory, nor will it be the last if history has anything to go by. Join us as we examine whether the crypto bear market might end soon. But before that, welcome back to your own channel, Crypto World, where you'll get all the crypto knowledge. And yes, do remember that this video is not financial advice, so do your own research before investing anywhere. So, let's have a look at the current scenario of the crypto market. Since December 1st, 2021, the value of BTC has fallen by $18,000, ETH by $1,900, Binance Coin by $240, and the list goes on. There's no easy way of putting this. The crypto market is having a tough time. Markets don't suddenly become bearish, however, as there are multiple reasons involved in the continual decline in prices. This time around, experts believe that these are the factors for the crypto bear market. Interest rate hike. The US government is planning to raise the interest rate sooner rather than later as they believe that the economy doesn't need handholding anymore. Falling tech stocks. The crypto market has some degree of correlation with the US equities market and is known to move in tandem with the tech-heavy NASDAQ index, which has been going through a correction over the past few months. Rampant inflation. The US is struggling with record high inflation along with countries like Brazil, Turkey, New Zealand, and others. Bans and regulations. Russia is vying to ban daily crypto trading completely, while countries like India are mulling over a tough crypto bill. There may be several factors along with these that are causing cryptocurrencies to fall, but broadly speaking, these factors can be used to arrive at this summary. Rising interest rates could mean that institutional investors have relatively less money to splurge on speculative assets. Investors are known to turn to more stable and less speculative investment options when the markets are bearish. Middle-class citizens from across the globe tend to prioritize needs first before speculative investments during high inflationary periods. Confidence in crypto is known to go down with each new ban or regulatory hurdle. Like we briefly mentioned before, this isn't the first crypto bear market the world has seen. The crypto winter, as it is popularly known, of 2013 to 2015 and 2018 was torrid, but cryptocurrencies like BTC recovered. With this in mind, let's have a look at what history says about crypto bear markets. If you are a crypto investor, you might feel the current bear market is never going to end, but history shows that is unlikely to be the case. Bitcoin has been declared dead more than 300 times over the course of its 9-year lifespan. To gain a little perspective, it's worth analyzing the various bear markets since Bitcoin's inception through 2018 and highlighting the different catalysts that drove prices and overall social sentiment into a tailspin. We broke down cryptocurrencies into different bear market periods. For our analysis, we define a bear market as a minimum of 20% drop in price lasting for at least 2 months in time. Through this definition, we discovered 4 major bear market periods over the course of Bitcoin's life, excluding the prolonged bear market of 2018 and onward. The first major bear market of Bitcoin was in 2012. That year was marked by a series of hacks and other negative events that contributed to the uncertainty around Bitcoin. On January 11th, the price of Bitcoin peaked in this bear market cycle. But things got really bad after February 13th when TradeHill, then the second largest Bitcoin exchange, was shut down due to regulatory issues. Bitcoin remained in a bear market during this period for a total of 6 months, dropping to $4.22 USD on July 11th. Other events that contributed to the asset's downtrend were the Bitcoinica hack, where 18,000 BTC was lost, and the Linode hack, where 46,000 BTC was taken from the web hosting provider. Apart from all this, we can't forget the fact that the crypto market is growing steadily. Let's have a look at it. 2021 was a big year for crypto in many ways. Big brands started accepting BTC, ETH, Doge, and others as payment, while crypto investments from countries like India soared to record highs. The market cap of cryptocurrencies reached $3 trillion at one point in 2021, powered by the likes of venture capital funds that invested as much as $30 billion. Remember, these investments happened even with lockdowns, new variants, China outlawing crypto, and other events. Long story short, there's a lot of money invested in crypto. The trend looks to continue in 2022. A shining example would be the fact that crypto and blockchain startups have raised as much money in January 2022 as all African startups did last year. Mind you, the African startup market isn't a pushover and is growing at the rate of knots. The reason for this could be that the crypto market is currently forward-looking, as explained in the next headings. With all this, what are your thoughts on whether the crypto market would correlate with the stock market? Share your views in the comments section. Here's our opinion on the same. ARK Invest founder Cathie Wood said that despite the recent correlation between crypto and traditional assets, the crypto bear market will soon be over. She said that crypto is a new asset class that is expected to see exponential growth over the next few months. This is because blockchain technology, NFTs, the metaverse, and cryptocurrencies in general are undergoing a development period much like the tech and telecom bubble. Nothing is for certain, but looking at historical price data for Shiba Inu shows the distance between the two all-time high prices last year was about 6 months. The first Shiba Inu all-time high was a price of 0.0003503, after which the price fell to 0.0000628. Shiba Inu then went to $0.00008 in October, and so far prices have not fallen past 0.0001553. Evergrow Coin only launched in September last year, but after hitting its all-time high of 0.0000325 in October last year, prices are still above pre-all-time high prices. It's worth noting that the S&P 500 hit its highest prices last year at the end of December, a whole 2 months after Shiba Inu and Evergrow Coin reached their highest prices. Going by historical data, crypto has the potential to decouple from traditional markets and has a habit of recovering much quicker. Now let's take a look at some different factors that impact crypto markets. The impact of NFTs on the crypto market. Non-fungible tokens, or NFTs, have blown into popularity over the past 2 years. Artworks and collectibles are known to be the most popular types of NFTs because they sell like hotcakes. The thing is, NFTs are treated purely as assets and have evolved separate qualities and benchmarks compared to cryptocurrencies. Think of the Bored Ape collection versus Bitcoin. But the savviest of NFT investors and top-notch research can tell you that the crypto and NFT markets are somewhat interrelated, not in terms of volatility, but investor behavior and uncertainty. After all, NFTs are built on the blockchain and priced in cryptocurrency, so a decline in crypto markets will be bad news for NFTs as investors may or may not be confident enough to pay the steep prices. That said, the long-term outlook towards NFTs is largely positive according to many experts, and we'll have to wait to see how this plays out with the bearish crypto markets. The rise of the metaverse in this situation. The metaverse is going to become a reality sooner rather than later as companies like Facebook have rebranded themselves to Meta as a way of signaling their seriousness. Cryptocurrencies will have a major role to play in the metaverse. 1, they offer a quick and decentralized way to facilitate transactions, and 2, they're completely digital. Platforms like Decentraland and Axie Infinity have already laid somewhat of a blueprint for integrating cryptocurrencies with the metaverse, which can be viewed as a positive long-term sign. Concluding all this, volatility and bear runs are as old as the market itself, regardless of whether it's in relation to commodities, stocks, or cryptocurrencies, and are driven by a variety of factors. We've discussed some of these factors for the recent crypto bear market and the silver linings that exist in the form of the money being poured into cryptocurrencies, NFTs, and the metaverse. Whether or not this bear run will end anytime soon remains to be seen, but what is certain is that the coming weeks and months will define the fragility or lack of cryptocurrencies. And do tell us your thoughts on this dip. Are you going to put your money in this bear market? So that is all we have for today. Consider subscribing to the Crypto World for more amazing crypto videos daily. Peace out.